patience is the new cryptocurrency. Think about how Stoics, masters of self-control and discipline, would become real millionaires in 2024. If you want to know how simple Stoic principles can help you become a successful investor in the modern world, you must watch this video until the end. Because in this video, I will explain why patience today is that very Bitcoin you've been searching for so long. Hit the like button and make yourself comfortable, because this video might change your perspective on how to approach investments. Let's start by breaking down the fundamental principles of Stoicism. Stoicism is a philosophy that originated in ancient Greece and Rome, emphasizing the importance of self-control, accepting the inevitable, and focusing on what we can control. For Stoics, virtue and wisdom were key aspects of a successful life. They believed that success does not depend on external circumstances, but on our attitude toward them. Marcus Aurelius, the Roman emperor and one of the most famous Stoics, wrote in his Meditations, "Live each day as if it were your last, but act with the understanding that you may live many more years." This phrase perfectly summarizes the Stoic attitude toward time and patience. Stoics understood that life is full of unpredictability, but they knew that controlling their thoughts and actions would allow them to stay afloat even in the toughest moments. Now let's fast forward to our time. Imagine a Stoic entering the modern world of investments, where noise, panic, and the thirst for quick profit flood the market. How would they react to the ups and downs of cryptocurrencies, market volatility, and endless news about new financial instruments? The answer is simple. They would remain calm and use patience as their main weapon. In today's world where everyone is striving for quick success, many forget that patience can be the key factor in achieving long-term success. This reminds me of a famous story about Bitcoin. In 2010, when someone spent 10,000 Bitcoins on pizza, few could have imagined that within a few years, the value of one Bitcoin would reach tens of thousands of dollars. Those who were patient and held on to their assets became real millionaires. But how is this related to Stoicism? At the heart of Stoic thinking lies the idea of accepting reality as it is and controlling our reactions. Stoic investing means accepting the market as it is, with all its risks and uncertainties, while maintaining a cool mind and a long-term vision. When the market falls, many investors panic and start selling their assets, fearing even greater losses. However, in such a situation, a Stoic remains calm. They know that time is on their side and that panic is the worst enemy of a successful investor. Instead of following the crowd, the Stoic analyzes their long-term goals and asks themselves, what can I control in this situation? Consider the example of meme coins, which have become incredibly popular in recent years. Many people see them as a chance for quick profit, but the Stoic approach suggests a different view. A Stoic won't rush into investments based on hype and emotions. They will thoroughly study the project, its goals, the team, and then make a balanced decision based on logic and reason, not the desire for instant gain. This reminds us of another key Stoic practice, the dichotomy of control. Stoics taught that there are two categories of things, those we can control and those we cannot. In investing, a Stoic focuses on what they can control, their attitude toward risk, asset selection, time horizon, and exit strategy. Everything else, the market's movements, other people's opinions, news, is beyond their control and therefore should not cause concern. Let's return to cryptocurrencies. In 2021, there was a sharp drop in the price of Bitcoin, and many investors, driven by fear, began to sell their assets en masse. But those who remained patient and believed in the long-term prospects of cryptocurrencies saw prices start to rise again. This is a clear example of how Stoic patience can yield significant results in a volatile market. Stoics also taught the importance of minimalism and avoiding excesses. This principle can be applied to investments as well. Often, investors try to diversify their portfolios by adding numerous assets without fully understanding their true value. A Stoic, however, would choose a few quality assets and focus on holding them long-term, avoiding unnecessary fuss. Imagine how a Stoic approaches investing in ETFs. Instead of choosing funds based on the latest trends or popular themes, they will choose those that align with their long-term strategy. They will patiently hold these assets, knowing that time is on their side and that short-term market fluctuations are less important than their ultimate goal. Another important aspect of Stoicism is the understanding that wealth itself is not the goal. For Stoics, wealth was a tool for achieving greater good and fulfilling their duties to society. Investing from this position, a Stoic will not be obsessed with the pursuit of profit. They will see their investments as a way to ensure financial independence, help others, and contribute to the development of society. The long-term thinking that is so valuable in Stoicism can be compared to planting seeds. When you plant seeds, you don't expect the harvest the next day. You know it will take time, patience, and care. Similarly, in investments, a Stoic understands that it will take time to achieve significant results. They are not in a hurry and do not succumb to emotions, knowing that their patience and efforts will bear fruit. Imagine a Stoic investing in cryptocurrencies. They will not buy assets in a fit of emotional enthusiasm when prices are at their peak, nor will they sell in panic when the market falls. They will choose a strategy based on careful analysis and long-term prospects, then follow it despite all market fluctuations. This approach helps avoid common mistakes many investors make by reacting to short-term changes and missing the opportunity to benefit from long-term trends. Consider a real-life example with Ethereum. In 2017, its price rose significantly, and many investors rushed to invest in it, hoping for quick profits. However, when the cryptocurrency market began to decline in 2018, many of them sold their assets at a loss, succumbing to panic. But those who followed the Stoic approach kept their investments and saw Ethereum rise again in a few years, reaching new heights. This example shows that Stoic patience and the ability to withstand market storms can yield tangible results. Unlike short-term speculators, Stoics aim to create a sustainable financial future, understanding that time is their ally, not their enemy. It's also important to note that Stoics were masters in managing their emotions. In the world of investments, emotions often lead to mistakes. Fear, greed, uncertainty, all of these can lead to impulsive decisions. A Stoic, however, learns to control their emotions and does not allow them to influence their investment decisions. Imagine a Stoic facing a sharp market decline who doesn't succumb to panic. They analyze the situation, considering their long-term goals, and understand that the market is volatile by nature. Instead of selling assets at a loss, they keep a cool head and stick to their strategy, knowing that short-term fluctuations should not dictate their actions. An important part of Stoicism is also the understanding of the nature of wealth. For Stoics, wealth is not an end in itself, but a means to achieve higher goals. They did not seek luxury or excess, but saw wealth as a way to help others, support themselves and their family, and fulfill their moral obligations to society. An investor following this principle will not greedily accumulate capital for the sake of accumulation. They will strive for financial independence that allows them to live freely and support those in need. This gives their investments deep meaning and helps avoid mistakes driven by the desire for quick profit. Stoics also knew that the future is unpredictable and prepared for any scenarios. This principle is applicable to investments as well. No one can predict how the cryptocurrency market will develop or how the economy will change in the coming years. But a Stoic understands this and prepares their assets for various possible scenarios by diversifying risks and maintaining flexibility. One tool that helps Stoics and modern investors cope with uncertainty is the regular reassessment of their assets and strategy. A Stoic will periodically review their investments, asking themselves, do they align with my long-term goals? This helps them stay on the right path and make necessary adjustments if needed. Let's consider another example, investing in ETFs. For many, this is a way to ensure stable income with minimal risk. A Stoic will choose ETFs that align with their long-term strategy and hold them despite market fluctuations. Their patience will allow them to profit in the long term, even if the market goes through several cycles of growth and decline. It's important to remember that Stoics also paid great attention to their lifestyle. They sought minimalism, avoided excess, and focused on true values. This approach can also be applied to investments. Instead of striving for the maximum number of assets, a Stoic will focus on the quality and long-term potential of their investments. Imagine how a Stoic selects cryptocurrencies for their portfolio. They won't chase after every new token that appears on the market. Instead, they will choose a few projects with strong fundamentals and focus on holding them long-term. This approach will help them avoid mistakes associated with excessive diversification and emotional decisions. It is also worth mentioning the importance of understanding the nature of cryptocurrencies themselves. The Stoic approach requires careful study and understanding of the technologies underlying the assets. A Stoic won't invest in what they don't understand. They will study the project, its goals, its technical foundation, and only then decide whether it is worth including in their portfolio. Finally, I want to emphasize that Stoicism is not just a philosophy. It is a way of life that can be applied in various aspects of our daily lives, including investing. Patience, self-control, a long-term vision, and the ability to control emotions. All these qualities help Stoics achieve success in any endeavor, including investing. If you want to succeed in the modern world of investments, you should adopt some of these Stoic principles. Do not rush, control your emotions, make informed decisions, and remember that the path to wealth is not a sprint, but a marathon. By applying Stoic wisdom to your investments, you will create a stable financial future and become a true master of your fate. Applying these principles to modern investing, Stoics realize that true success comes to those who are willing to go the long way. Patience, discipline, and constant striving for self-improvement are what make them successful in any endeavor, whether investing in cryptocurrencies or other financial instruments. A Stoic approach to investing also involves accepting losses. They understand that losses are part of any investment process. What matters is not what you lost, but how you handled that loss. A Stoic uses losses as an opportunity to learn and improve their strategy, not as a reason to panic or abandon their goals. For example, if one of his assets falls in value, a Stoic will not rush to sell it. He will analyze the reasons for the decline and decide whether to stick with his investment strategy or make adjustments. This approach allows him to minimize losses and learn from each case. Consider a situation where the market is experiencing a major downturn and cryptocurrency prices are falling. Many investors begin to panic, selling off their holdings to cut their losses. A Stoic, on the contrary, sees this as an opportunity. He realizes that the market is cyclical and a downturn will sooner or later be replaced by growth. Instead of giving in to panic, he keeps his cool and perhaps even uses this moment to increase his position in quality assets at a lower price. This principle of buy when there is blood in the streets is closely related to a Stoic understanding of the need to remain calm and use moments of crisis to one's advantage. This philosophy may seem radical, but it is based on a deep understanding of human psychology and and market mechanisms. The Stoics also emphasized the importance of reflection and introspection. They took time to reflect on their actions and thoughts, analyzing them with a view to improving them. This can be applied to investing as well. Regularly analyzing their investment decisions and strategies helps the Stoic understand what worked, what didn't, and what can be improved in the future. For example, at the end of each month or quarter, a Stoic can analyze his trades and evaluate the performance of his chosen assets and strategies. This helps him stay on track and make the necessary adjustments to move toward his long-term goals. Another important aspect of Stoicism that can be applied to investing is the concept of memento mori, the reminder of mortality. This does not mean that a Stoic must be pessimistic or fearful of death, but he or she always recognizes the finitude of one's existence and the value of time. This principle helps the Stoic avoid wasting time and resources by focusing on the things that really matter. In the world of investing, this means that the Stoic will avoid speculation and short-term strategies that require constant attention and nervous tension. Instead, he will focus on long-term investments that will produce sustainable results and allow him to maximize his time. Consider the example of long-term investing in stock indices. Many investors try to beat the market by making numerous trades and reacting to every piece of news. A Stoic realizes that constant activity in the market does not always lead to success. He would rather buy and hold assets that have the potential for steady growth over many years, focusing on his life goals and objectives. This approach is reminiscent of the concept of compound interest, which Albert Einstein referred to as the eighth wonder of the world. Patience and time are the Stoic investor's main allies. Gradual capital appreciation based on long-term asset retention leads to significant results that can exceed all expectations. Nor should we forget the importance of moderation and self-discipline, which are key principles of Stoicism. Stoics knew that excessive attachment to material things and excesses could destroy inner peace and lead to frustration. In investing, this is reflected in the fact that a Stoic will not chase the highest possible return at any cost. He will choose a balanced approach that will allow him to maintain peace and harmony. For example, a Stoic will not invest all of his funds in one risky asset, even if he expects large returns from it. He recognizes the importance of diversification and that the pursuit of too much profit can lead to serious losses. Instead, he would prefer to spread his risks wisely in order to preserve his capital over the long term. The Stoic attitude toward investment is also manifested in the ability to find a balance between current comfort and future security. The Stoics understood the importance of moderation and did not allow themselves to live only to accumulate wealth. They sought harmony in their lives by finding a balance between work and leisure, savings and spending. In investments, this means that a Stoic will not sacrifice his current comfort for the sake of maximizing future profits. He realizes that life is too short to completely give up the pleasures and joys of today for the sake of a hypothetical future. Instead, he chooses a strategy that allows him to maintain a balance between satisfying today's needs and preparing for future challenges. When we talk about patience in investing, it is important to remember that patience is not just waiting, but active waiting. This means that the Stoic does not simply wait for his investments to bear fruit, but continues to evolve, learn, and adapt to changing conditions. He realizes that the world does not stand still, and to be successful, one must be prepared for change. For example, a Stoic may start learning new financial instruments, such as DeFi or NFT, to keep up with the latest trends. But he or she will do so wisely, not succumbing to hype, but viewing each new instrument through the lens of his or her long-term goals and Stoic principles. Another important aspect of patience is the ability to wait for the right moment to act. The Stoics knew that haste often led to mistakes and preferred to act deliberately and with calculation. In investing, this means that a Stoic will not seek to be constantly active in the market. He will wait for the moment when conditions are most favorable for investment and then make his move. For example, instead of buying assets at the peak of their value, a Stoic might wait until the market calms down and prices become more reasonable. This approach allows him or her to minimize risk and maximize potential profits by acting on reason rather than emotion. A Stoic attitude helps avoid one of the most common mistakes investors make: the fear of missing an opportunity, FOMO. Many people, when they see others making money in volatile markets, panic and invest without proper analysis for fear of missing an opportunity. A Stoic, on the other hand, realizes that there will always be opportunities and does not panic. He acts calmly based on his principles and long-term goals. Consider the example of meme coins. Many investors, having seen the rapid growth in the value of some meme cryptocurrencies, rush to invest their money in them, hoping for a quick profit. However, a Stoic will first scrutinize the project, its team, technology, and potential, and only then decide whether it is worth investing. This approach protects him from hasty and ill-considered decisions that could lead to significant losses. A Stoic realizes that meme coins and other volatile assets can offer high returns, but only if they are based on real and long-term values. He will not risk his capital for immediate gains, preferring prudent and measured investments that will support his long-term goals. In conclusion, a Stoic approach to investing is not just a strategy, but a way of life that helps one remain calm and confident even in the most volatile of environments. The Stoic sees patience not just as a virtue, but as the key to achieving success in the long run. By following these principles, he becomes not only a successful investor, but also a person who is in control of his life and his emotions, not letting external circumstances determine his path. Friends, if you enjoyed this video and want to learn more about how to apply Stoic principles to investing, don't forget to subscribe to our channel and give us a like. Your support helps us create new content. And here's a little challenge. If this video gets 500 likes, I'll prepare a special issue for you on how to create a Stoic cryptocurrency investment portfolio that combines a balance of risk and stability. This issue will be a real guide for those who want to succeed on the long journey of an investor. Leave your comments. What principles of Stoicism are closest to you, and how do you apply them to your life? Thank you for being with us, and see you in the next videos.